All right, so we're going to get into some, not necessarily predictions, but an outlook today across the markets, both in Bitcoin. We'll take a look at some altcoins. I know you guys will always love to take a look at the markets and really maybe how 2023 could be shaping up. One of the things we wanted to do was definitely bring in a guest for this, and it's going to be a fun one. My name is Paul Barron. Welcome back into Tech Path. This is going to be good because I think one of the guys that really follows this market, I would say top tier, in terms of channels, but also his research level and just his knowledge. And he's an OG in the market. You guys know him, of course, as CryptoBanter. Want to welcome Rand Neuner into the show. Great to have you back, Rand.
Well, Happy New Year. Nice to see you, my friend. Thanks for having me.
Yes, absolutely. So, Rand, we had obviously Thursday, CPI numbers dropped this morning, somewhat on target. You know, if you look at Zero Hedge, they're kind of saying steady lads almost with CPI and CPI core. And then you've got the potential of how this may affect the FOMC meeting coming up here in a few weeks. When you look at that, I mean, this was kind of a nothing burger. I think a lot of people were anticipating where we were, but what do you think?
Not at all. Not at all. I think if you could just call up that tweet, I want to show you where the data is hidden. So, in fact, if you'll allow me to toggle my screen, let me show you. Let me quickly.
Let's do it.
Jump onto my screen. So, if you could see my screen over here. Okay, so let me just try and get onto, there we go. So we know that what the market was expecting 6.5%, and the market got the expectation of 6.5%, which is why everybody is saying that this whole thing was actually a nothing burger. But what's hidden here is this. What we can see is that in December, for the first time, inflation went negative. So if you look at the annual inflation and you compare December last year to December the year before, you can see that there's a 6.5% inflation. But if you look at it month on month, what you can see is that there's actually a deflation of 0.1%, which means that for the first time in a long time, in fact, I can't remember the last time that this happened recently, we've actually got deflation or negative inflation. Now, let me show you why that's so important. If you look at this table over here, shows the month-on-month inflation. And I want you specifically to have a look at it from July. So in July, there was no increase in inflation. It was 0%. Then there was a 0.1% increase. Then there was a 0.4% increase. Then there was a 0.4% increase month-on-month. And then there was a 0.1% increase. So all in all, we could say that from July to November, there was about a 1% increase in inflation. It is slightly higher, but let's say about a 1% increase in inflation. Now you add December and you add a negative 0.1, you've got 0.9% for the last 6 months, which means that if you annualize that, you're pretty close to the Fed's 2% inflation target. And if you're very close to the Fed's 2% inflation target, it could actually mean that the Fed has got us back to this soft landing that they said, because that could mean that we've seen the worst, and it certainly means that we've seen the worst of the rate hikes. Now, again, I'm going to toggle and just show you my screen. But if you look at what the rate hike expectations are right now, which I think you can see, can you see the screen? Hold on, there we go.
Not yet. There you go.
So you can see that there's now an 88.2% chance of a 25 basis point rate hike when the Fed meet on the 1st of Feb in their first meeting, which is amazing. Lastly, today we had some Fed representatives, or specifically Harker, speak, and he says he thinks 25 basis points will be appropriate going forward, which means that we've probably seen the worst of this Fed tightening cycle. And I don't know if that's the case, then for me that feels like this chapter's over and we should probably move to the next chapter.
Well, it's interesting. You said something there in terms of annualizing that down to the 2%. So you feel like that based on what we've seen here in this 6-month run-up, with these numbers coming in like they were with the negative 0.1 in December, is that if you normalize that out on an annualized basis, you're saying that that gets us to a 2% in what looks like maybe 12 months?
Well, by next year, July, if we continue like this, if the last 6 months are the same as this 6 months, then by next year, July, we're going to be at a 2%, a 2% rate, which is, sorry, this year, July, not next year, 2023 July. by the end of June, we will be back at a 2% or even lower, 1.8% inflation rate if we continue on the trajectory.
Yeah, so this brings up a really interesting point, because this is one of the things that I think a lot of analysts look to, and many of the macro guys that we bring on the show, is when you look at the tightening that has occurred, many people said, hey, it was a little bit kind of late. There has been some adjustments, the market itself. Jobs has not necessarily performed the way that most analysts anticipated, because we thought there would be a little bit more pressure on the jobs market. That's not necessarily holding true. But if we do get a jobs situation starting to occur in Q1 and Q2, along with the credit crunch that has occurred, we've already started to see a lot of pressure within some of the markets here in the U.S. at least, real estate, automobiles. Obviously, prices still, somewhat skyrocketing on consumer goods. But do you think that will have any bearing in the first 2 quarters of this year if we do get jobs starting to wobble a little bit along with consumer credit?
So the jobs numbers, I'm going to say that they have started wobbling. We even had BlackRock the other day saying that they're going to start reducing their staff. Pretty much every one of the big companies has come out and said they're starting to reduce their staff. I think the one thing we're not feeling in jobs is we're not feeling pain or max pain when it comes to jobs. So we're not getting, It's almost like the scales haven't done like the extreme opposite. There is one thing that you probably should consider. And again, I think that this is something that not many people are considering. But remember that jobs in the United States are also a big function of immigration. And the more people that immigrate, the more unemployment there is, or the more people are looking for jobs. Now, remember that we had about 2 to 2.5 years in the US, and maybe even more, where there was no intake of new immigrants, specifically around COVID and lockdowns that were related, and then the backlog. And even now, the stance on immigrants coming into the US and coupled with the backlog is quite limited. So you're in a position where you've got kind of a double whammy. So, on the one hand, people were struggling to go back to work. On the other hand, there were much less people than normal. Right. So it's almost like you're trying to fill a bucket, but you've also switched off the tap. And so there's no people coming in. And the people that you've got in the bucket kind of don't want to work, or we struggle to get them back to work. I don't think we're going to see a scenario where we get a massive jobs, like where people start to be really unemployed. I think by that time, the Fed actually would have achieved a soft-ish landing. I think what I'm trying to say is that I think set par, all else being equal, I think we've seen the worst. And I say set par because, we still have a war situation in Russia, Ukraine, and there still are supply challenges, but I think we've seen the worst of it. And I think it's time for the new narrative, to be honest.
Interesting. Well, to kind of confirm, this is a tweet from Crypto World Josh. He kind of confirms what you're saying. U.S. CPI inflation, obviously the fall, and he's looking at this. He looks at it as at maybe the near or end of 2023. To your point, possibly by July, if we saw that occur. And back to the job scenario, because this is something that we follow pretty heavily, and we're kind of tied to the food industry a little bit from one of our sister networks. And most of those non-farm jobs are in the hospitality sector. In fact, the lion's share, 90% of those job growth numbers came from hospitality, which was a pent-up demand of reduction, because almost 200,000 restaurants closed during COVID. We saw almost 150,000 restaurants literally go out of business, which if you average the number of people in those restaurants, that's a $15 million person employment base just in the United States. So having to back in now to the market, because now we're starting to see a lot of growth in that sector. And of course, a lot of new jobs coming right back, because that was a big vacate area of it. So I'm kind of in alignment with you, is that we may not see the fall off completely unless there is too much pricing pressure from restaurants. And this is a concern that we're watching, because we're seeing menu prices and all these kind of things just skyrocketing. We may see a little bit of consumer pushback, which could be a very interesting scenario playing out here in the next 6 months.
I think the one thing that we both haven't spoken about, Jerry, is the fact that China's loosening its COVID policies.
Right.
And that means two things. On the one hand, we're going to get a lot more consumption from China, because China hasn't been consuming because they've been locked down. And that could put some pressure on commodities and stuff like that, and food and stuff like that. On the other hand, there's a lot of supply shortages in terms of chips and phones and everything else, which is going to be released from China. So net, I think that this Fed trying to balance jobs and interest rates is probably more or less at equilibrium. I think we're still going to see a few jobs coming down, but I think I don't like saying it because it's almost contrarian to support the Fed, but I really think that Jerome Powell and his team woke up very late, but they were very aggressive in their rate hike. But I think from here, it does seem I was expecting a much worse landing, and it's not that. So that's how I see the broad outlook. I think the outlook for crypto is actually even better, to be honest.
I would agree. I'm kind of in that camp. I'm looking toward the first 2 quarters, still trying to get our feet under us right now. Obviously, some things could happen, in the markets that could kind of change things up a little bit. We'll see, how the jobs scenario plays out, how credit plays out, how we'll see CPI and Powell adjust in terms of just the amount of tightening. And even if we just hold the current interest rates for the rest of the year, I think it'll be an interesting play out for sure. I want to jump over to Bitcoin because this is something we've been, we get a lot of Bitcoiners on our show. And then I think we're going to have one today. Greg Foss is going to be coming on the show. So we'll get a chance to jump into all that stuff for sure. But when you look at Bitcoin and you look at the narrative that a lot of Bitcoiners push into the market, which is really that everything else is crap coins, and that you don't need to pay attention to any of that. And I look at it, and I had a chance to talk to an OG the other day, and we got into kind of the whole narrative of possibly expanding the technology base, looking at maybe even a layer 2 and sidechains for Bitcoin. What is your narrative right now in the Bitcoin community? I mean, we still cover it in a massive way. It's a big part of our show. What are your thoughts on kind of where Bitcoin is going overall?
So what are my thoughts in terms of Bitcoin going overall? Bitcoin is going up, and the chart of Bitcoin is going up and to the right. I'll summarize it for you very, very, very quickly. I think that in crypto, we had a year filled with black swan events, which deleveraged the market. But leverage in a market is very healthy. Too much leverage is unhealthy. Too little leverage is also unhealthy. And we completely deleveraged the market. Let me tell you what I mean. First, we unwound Lunar, and that unwound 3 Arrows Capital, which then unwound Genesis, Celsius, Voyager, BlockFi, which then took down Alameda, which then took down FTX, which then took down the whole of retail. And then that took down DCG and Genesis. So all of the leverage is out the market. There's no more place for leverage. It's just zero leverage in this market. Now, a market without leverage is a very, very, very unhealthy market. On top of that, we have a lot of funds that are consumer funds that could be used to trade, which are locked up in all of these liquidations hearings. So you've got Celsius, you've got Voyager, Voyager, BlockFi, Genesis equals Gemini, Gemini Earn, etc., etc. All those funds are locked up, but all those funds will be coming back into the market as soon as all of the situation unwinds itself. Now, yesterday there was a massive headline. I quickly want to toggle to show you the headline. I'm hoping that in a second you'll be able to see it. I just want to find it here. Hold on a second. I've got to find these headlines for you. There was a headline yesterday that FTX, the liquidator. Here it is. Let me see. Can you see my screen there?
Yep.
There was a headline yesterday that the FTX recovered over $5 billion, and that's the US liquidator. That's the US FTX. Now, I made a spreadsheet today. And I looked and I said, hold on a second, let's take the worst case scenario where they've recovered $5 billion. The Bohemian FTX liquidator also say they had 500 million, but a lot of that is FTT tokens. There will be some clawbacks from political donations and other donations, and then there will be some other illiquid stuff. And so I think that if you look at the spreadsheet, which I built today, it shows that FTX shareholders could get anywhere between 40 and 60% of their money back. And I don't know how you feel about it, but the way I feel about it is that most people that were in FTX actually wrote off their entire investment. And so all of a sudden, we're going to get 60. If you wrote off all your investment in FTX, which most of the people that I know did, and all of a sudden you may get 60% of your money back. And that means that funds like Multicoin Capital and other funds that had money locked up in FTX now have 60% of their lost capital back to play with. That stimulates demand. The Voyager customers, the $1 billion that I think is locked up in Voyager, I think it's there or thereabout, that's going to hit the market because the court approved the Binance offer to make them to rescue Voyager. So that is going to resolve itself. The next domino that needs to resolve itself is the DCG Genesis Gemini domino that needs to resolve itself. Once that resolves itself, then all of a sudden you've got all this liquidity back in the market. And so when I take that thesis, I say, okay, as a whole, crypto has to go up in 2023 because I think the macro conditions are better, inflation is back where it needs to be, and the crypto market, all these funds will become unlocked, and therefore crypto moves up and to the right.
Right.
Now let's talk about whether it's going to be Bitcoin or altcoins, because the Bitcoin community, as you said, I thought that Bitcoin maximalism and the related toxicity was something that was very 2017 when no other blockchain has
not the case.
At the time when no other blockchain had proved a use case, I understand that. But once you've seen DeFi, once you've seen NFTs, once you've seen layer 2s on Ethereum, and the fact that layer 2s on Ethereum are doing more transactions than the Ethereum layer 1 is doing, I don't think you can argue anymore that Bitcoin is one use for blockchain, but there are going to be many other uses for blockchain. And in fact, probably the other uses for blockchain are going to be bigger than the Bitcoin use for blockchain, which is purely as a store of value, a digital store of value or digital gold. And so one of my theses for this year is that Ethereum outperforms Bitcoin by about 50%. If markets survive and everything else happens, I say Ethereum outperforms Bitcoin by about 50%. And I'll show you a few. I'll show you a few. Let me just show you something. So let me. I don't know if you can see my screen. So there we go. Let me do it again. So that's the ETH BTC chart over there. Mm-hmm. You can see that the first thing that's happened is it's broken out of this little trend over here, which is one thing. But that's not the exciting part. The exciting part is if you zoom out, which I'm going to do on the weekly just to make it easier for us, so we can look at it. You can see that if you look at the chart, you can see there's a massive cup and handle from 2018. There's the cup and there's the handle. And that means that the next level that we can look at is about 0.88, and it's now trading at 0.76. The next resistance level is at about 0.124, and then the next resistance level is at 0.15, which coincidentally is where Ethereum flippens Bitcoin. Yep. So I think that the use cases for altcoins trump the use cases for Bitcoin. And I want to just say one more thing. If you look at umbrella sales, umbrellas. So if you look at umbrella sales, what umbrella people know, manufacturers of umbrellas know, is that in the summer nobody buys umbrellas. It's the purchase of umbrellas is very low, and in the winter everybody goes out and buys umbrellas if you're in a rainy country. Now the analogy there is that I don't know if you've ever walked in London, but if you walk in London on a sunny day, you can pick up an umbrella for £3. And if you walk in London on a rainy day, that same umbrella will cost you £10. So why do I say that? Is because to me, Bitcoin is an umbrella against inflation and against printing of too much money by governments. And right now, it's not raining. Right now, in fact, there's a drought because the governments are tightening. So right now, specifically for the next 6 months of this year, I don't think there's a real need for an inflation hedge. Maybe I'm wrong, but as it stands right now, I don't see a pressing need to be buying umbrellas because it's not raining. But if the rain starts again, you're going to realize just how badly you needed that umbrella. So the smart money is probably buying Bitcoin now and waiting for the next inflationary cycle or whatever else. But right now, the way I see it, there's a bigger narrative for altcoins than there is for Bitcoin. And so my move yesterday was to sell a large chunk of my Bitcoin and put them into Ethereum. And the reason why I did that is I just think because I just think that Ethereum outperforms Bitcoin.
Yeah, I was looking at the tweet stream that kind of went into that very point. And this is interesting because obviously we cover Ethereum and the layer ones outside of what we've seen in the market, in terms of where growth will be. Obviously we cover a lot of Web3 and kind of the evolution of what's happening within gaming meta. And you look at just like the news with Avalanche and just a lot of this kind of interesting positioning for many of these projects early in this year. I think it's almost as if there's a storm brewing. So it's going to be very interesting to watch. I would agree with you that it's going to be a very interesting year. Do you think we'll see the flippening actually happen this year for Ethereum and Bitcoin? Probably
not
next
this year.
Yeah.
Look, it's very hard to make predictions in terms of time because you never know what else can happen. But I mean, I just think if you look at the two use cases, and I mean, let's just quickly look at Bitcoin versus Ethereum. So let's look at it. If you're a money manager, which is really where all the money comes from, because the real money doesn't come from retail, it comes from the money managers. And you're a money manager and you say, okay, there's two liquid cryptocurrency assets that I can invest in today, Bitcoin and Ethereum. On the one hand, you've got a store of value, which doesn't really generate much transaction revenue, has zero staking rewards, is not really ESG friendly. I mean, it's not unfriendly, we know that, but it has a perception of being ESG unfriendly. And then you compare that to Ethereum. Ethereum is the backbone for a new global digital economy. It is on proof of stake, which makes it ESG friendly.
Sure.
There is a staking reward today of about 5%, but that increases to 10, 15% when the network usage increases. And then you say to yourself, hold on a second, as a fund manager, where would you deploy your money? I would much rather own a share of the internet if the internet was monetized than gold, which is what my analogy is. And that's why for me, I'm much more excited by Ethereum and the prospects of Ethereum than I am about, I love Bitcoin and I have a lot of Bitcoin. And right now in my portfolio, I'm overweight Bitcoin and I'm underweight Ethereum. And so this year, what I've done is I've just toggled it a little bit.
It's interesting. I mean, my portfolio has some similarities to that. I'm a little bit more heavy on Matic just because of what I see around Web3 and what they're doing with Metaverse. Love that. And essentially that's a play on Ethereum anyway. So, and Ethereum is my number 3 position. And it's a very strong one. I mean, this is one that I truly believe is going to be the biggest part of kind of the next generation. It's also, and this is the argument I have a lot with Bitcoiners, is that if you just look at the amount of exposure that we've seen, not only with Ethereum, but a lot of projects, good projects, not some of the scams that are out there, but good projects, what they've done is created a gateway into the crypto community. And eventually those people find their way to Bitcoin anyway. So I feel like you have to open up the lanes of really how we're going to see mass adoption start to occur. It may not always be in Bitcoin. So it's an interesting situation. Let's talk quickly. Go ahead.
I don't get the argument around. I don't get this tribalism around Bitcoin and I just don't get the tribalism. Most portfolios that I know hold gold, property, and equities, and they don't fight with each other. They don't fight with each other in terms of why do you hold gold? If you hold gold, you can't hold equities. Breaking news: it is possible to hold Bitcoin and Ethereum.
Yep. It's a good one, unless you're Peter Schiff, of course. Then it's just own gold. Let's get over to Avalanche. Big news yesterday was the Avalanche partnership with Amazon. I mean, some people looked at this. I look at it from a technology standpoint, just in the sense of and I've talked to John Wu many times, and one of the things that kind of hit home for me on this partnership was a promise that he made to the crypto community last year, and it was in an interview we did specifically with John, and he talks about this Web 2 to Web 3 and the simplicity needed to be able to deploy. And of course, this one-click node launch, I thought was all right. So he made it, he made good on his promises for what Avalanche is doing. How do you think Avalanche How do you think it performs this year in comparison with some of the other layer ones?
So that's a very interesting question. Let's talk about the partnership first. I think well done to Avalanche or Avalanche Labs or whoever actually brokered the partnership. I think that this partnership is very much a part different to other crypto partnerships, because I think in crypto, the word partnership is very widely and loosely used. Yeah. And I think what they've done is taken it one level up to say, look, for one, we're not paying to use AWS services and thereby declaring that we have a partnership. We're not reselling AWS services and thereby declaring a partnership. This is much more a bona fide partnership. But if you dig into what this partnership is, it's not Amazon's endorsement of a blockchain or blockchain technology. Amazon's seeing an opportunity to rent out computer space on AWS. And what they said here is that if you read the fine print, what it says is they're going to provide credits and other incentives for people to spin up subnets on Avalanche. So, if I'm a business development manager and I say, hey, hold on a second, if you buy 12 months, I'm going to give you 12 months free because I want to start getting adoption onto AWS. So I think it is news, and it is great news. And I think it is a partnership, and well done to Avalanche. But it's not as if all of a sudden Amazon is entering the blockchain space and going to open the blockchain space up to their millions and billions of users. They're just selling more server space. So to be honest, I took a short position on Avalanche when I saw that the price just went up 35% on the back of this news. Just thought, too much too quickly. It's the same thing that happened with Gala Games earlier this year. I do want to say one thing though, which I think is highly, highly, highly encouraging. In a bear market, markets don't respond to good news. So you know that, in the bear market, you can spit out as much good news as you want, and markets don't respond to good news. This week, I've seen two examples. We've come in 2023, we got back to work, and I've seen two examples this week alone that the market is really starting to respond to good news. Now, that's signs of a bull market. We saw Gala Games make an announcement earlier this week that they acquired a studio, etc., and the price shot up through the roof. And we saw it happen again with Avalanche. When you take those two things together, the more exciting thing for me is to say, hold on a second. The market's starting to respond to good news again. And the market starts to respond to after not having responded to good news for last 6 months. That's a very bullish sign for me. And the more exciting thing for me is the market has a heartbeat again. It's responding to people who launch news. And that for me, I remember this 2019, 2020. We went through 2019, and boy, oh boy, you could have done anything and markets wouldn't have responded. And, beginning of 2020, you could have done anything. You could have announced bank adoption. You could have announced favorable regulation. The markets did not move. And then I remember that at the end of September 2020, market started to be very responsive to good news. So I think it's too early to call the patient beat back, but let's keep monitoring the heartbeat and see some more articles being published or news being published. Then we might be able to go back and say, hold on, we've managed to revive the patient and the patient's got to beat again.
Yeah, I think, Rand, so I would argue that position a little in the sense, I agree with the point is that the market is responding to good news or just any news, I think that has some vein of, hey, there's an upside here. But I look at, whether it's a project like Avalanche or, even if you look at Gala, full disclosure, they're a sponsor of our channel. I was looking at the Solana chart, and we're talking about literally here since late December to where we are right now, literally early January. And this is a 92% move on Solana. Now, a lot of that was correction from its $8 low. But when you look at Avalanche was kind of in the same spot. So, and maybe a little different narrative of what they're trying to paint out. The question is, what does that look like long term versus, other projects? And it's not that one's better than the other. What I'm getting at is that, when you look at deployment and the ability for scalability being a huge issue, I think that's going to be one that possibly Avalanche might have solved, or at least in a short way. The bigger thing that I look at with Avalanche is this whole Web 2 conversion, because this is a challenge that we talk to companies all over the world. We consult in Web3 and Web2 conversion, a lot in the big brand space. And one of the biggest questions I get from a Web2 company is how the transition starts to happen. And any companies that can help those transitions occur quicker or better, more smoothly, are the ones that I'm watching really closely. Obviously, Avalanche was one of them that we've had on target.
Yeah.
What is your position right now with Solana?
So let me just quickly touch on the position. First of all, I want to say that I think Avalanche is incredible, absolutely. I think that what they've done in their subnet, plugging into the main net chain, is absolutely incredible. I think that they now showing that their business development team is also very good. I'm interested to see how the Avalanche experiment. I said my one concern around Avalanche is, for me, going to be the first going to be an EVM world, Ethereum virtual,
right,
and the second world is going to be a non. Now, seeing the performance of Optimism, Matic, ZK, and all the scaling solutions that are out. My one concern around Avalanche is, why would I need a EVM world that is not plugged into the Ethereum main chain?
Mm-hmm.
That is not an Ethereum main chain or layer 2 and Ethereum. Why would it be developing in the EVM world? Should I do it on Matic, on ZK, on whatever else? So that's my one concern. Would say,
yeah,
look, I think these are very smart people who have got a good track record, good money behind them, and good partners. And so I'm interested to see how the experiment plays out. Is it one of my core holdings in my portfolio? Absolutely not. Now let's because
hey Ran, we're losing your audio. Your audio is clipping, so I'm not sure if it
how's that? Any better?
Yeah, it's almost internet. It's almost a speed issue or a latency.
Hold on, let me see if I can get onto a better internet. Give me 1 second.
While he's doing that, let's take a look quickly at Ethereum right now, because this is one thing that we're watching closely. And to Rand's point, if you look at this cup and handle that he's mentioning, this does have some of the markers of where a market could potentially go back. But if you look back all the way into November, which was the last time we saw $1,000 Ethereum's still at a 26% move here. So again, this is still possibly very, very early in how ETH is going to look for the rest of the year. And I think to Rand's point, I would say that, I agree with him in the sense that, Ethereum, especially with what's going to happen in the roll-up aspect, we're going to have some Polygon guys on to talk about this in terms of strategy in the future and why this is so important. But the point I'm getting at is that, to your point, Rand, is that you said earlier, there's going to be a multitude of chains. The question is there can't be too many. There's going to be a multitude of blockchains that are able to do some really important things around this. Not sure that Avalanche will be one of those chosen few, but it depending on their business development team, and this will depend on how they respond to this news, because if they can start packaging on Web2 companies making those conversions and follow that up, that'll be an interesting deployment strategy, I think, that we'll watch. Has your audio come back? Let me test it.
I hope so. How's that? Can you guys hear me?
It's still clipping. Yeah.
Ooh.
It's still clipping.
I can try. Try and shut down some internet browser. I mean, from a speed point of view.
Yeah, well, it might be your browser. It's possible because you are in the vMix browser there.
You want me to try and log off vMix and log back onto vMix? Would that make?
Yeah, sure. That's fine. We could do that. Bring you back in on
okay,
the
let me log
link.
off.
Same link.
Just use the same link there, Ran. While he's trying to get back on, one of the things that we'll get into, and it's kind of interesting that, and to his point, we're going to get into Solana. His statement right here on this tweet I thought was interesting in the sense of at $9 nobody wanted Sol, and obviously we had Tim Warren on, who Tim may have called the bottom when we had him on a couple of weeks ago. $8 was where he was pitching Solana being the potential for a re-entry point. So kudos to Tim. But at 1330 now, everybody's wanting it. I'd kind of love to get your input, guys, on, and make sure and smash the like button if you like these kind of back and forths that Rand and I do. It's always kind of fun. But I'd love to get your opinion on whether or not you're buying Solana right now, and this being the audience out there as well. So smash the like button if you are, and or comment below and let us know. Maybe drop some questions in over there. Ran, are you back in?
I hope you can hear me.
Okay, I think we have it. We're good. All right, we were just talking about Solana and your point to a tweet that you had up at the $9, nobody wanted it. It was like the plague, and then now at $13.30, everybody's buying it. What do you think Solana's position is right now? Because I've been not a Solana, I won't say a Solana hater, because I'm a technology guy, so I just don't like some of the things that have happened. But then when I saw Breakpoint this last year, we did a whole video on it. I was like, oh my gosh, there's just so many dApps that are building on this platform. This has got to be good. They're doing great things. And then, of course, the FTX situation happened.
So you have to understand, you have to, I'm trying to get data here, but I think I won't be able to get the data. You have to look at fundamentals and block out the noise. And for me, Solana has a huge overhang of tokens of the FTX situation. We know that, but I think that's already been priced in.
Could be.
And Solana was declared dead. Hit $8 and $8.80. Solana was declared dead. And what I love is when tokens are declared dead, but when you actually look under the hood, you realize that the fundamentals are shiver. The number of transaction/active addresses on Solana has since the FTX collapse. The growth of Solana since the FTX collapse has been insane. There was the launch of that meme coin. I think it was called was it called Boink or whatever it was called?
Bonk.
Recently,
yeah,
Bonk. Which just shows that one meme coin, one successful project on Solana could get this thing up. In summary, I think Solana has a very, very smart bunch of developers that are working on it. They're working on it nonstop. I think it's a very cool chain in terms of transactions. It's always in the top 2 or 3. So it's always number 2 and number 3 between Ethereum, Solana, and Matic. So from that point of view, it wins. In terms of the number of active addresses, Solana is the clear winner. I think Matic comes close from a number 2. In terms of developer intellect, I was at Breakpoint, you were at Breakpoint. These guys are smart, and there's a lot of people building on Solana. The downsides, because we want to try and keep it balanced, there is about $1 billion, or maybe now less, probably about $500 million worth of Alameda tokens, which will unlock over time and then be put back into the market. And the market needs to absorb that sell pressure.
Right.
The second thing is the VC funds that used to fund a lot of projects on Solana, namely Multicoin and FTX and Alameda, are now no longer in existence. Mm-hmm. And so now what's left is to say, does Solana have a strong enough community, both in developers and in users, to actually reignite the chain? And I think time will tell. I've got huge exposure to Solana because I think that the answer is yes. I guess the last thing that we need to look at is to say, will chains like Aptos and Sui, because they are derivatives of the Rust language, which is the language that Solana, that you write on Solana with, will they cannibalize Solana? So far, I haven't seen any great shakes from Aptos. But time will tell. So that's the bull case and the bear case for Solana. I'm much more that what I love is opportunities where a token is too hard hit and the market panics too much. And I think that if that is the case and Solana does recover, this may be a generational buying opportunity for Solana.
Very interesting.
It may be similar to the time when Ethereum hit $87 after the COVID correction. It may be that moment, maybe.
Interesting stuff. Ran, I think we're going to cut it short today because we're still having some problems with the audio. But listen, we're going to get this back. I know are you coming to Miami for the Quantum event?
I am. I'll see you in Miami.
Yeah, we'll get together then. Maybe we'll try to do something in person there. But anyway, hey, it's always great having you on. Thank you so much again for stopping in today. We appreciate it.
Sincere apologies about the sample.
No worries.
Thanks, man.
All right, you bet. All right, so you guys, we'll wrap up on this, but I wanted to hit on one of the things with DCG, and this, of course, this is going to be an issue that I think we're going to be dealing with for the next few months. This could be another scenario where we do see some more pressure on the market. So I think there was a question in the chat there, does Rand, I wish we would have been able to ask him that. does he think there's going to be a black swan event this year? And this could be one that does correct. Now, to his point, there's a lot of capital that could be recovered, obviously through FTX. We had this on our piece. I was impressed with that recovery in the sense, because you're right, he is exactly right. There's going to be some recovery of funds here, which will give almost like found capital to some companies, which could change the entry points. This is becoming a very interesting part of the crypto cycle in general, especially of what's happened over the past year and now what we're leaning into on 2023. I think we may be in a very interesting spot, both from a macro standpoint. I still believe that we're more back half. I still am holding to that thesis, and maybe Ran is correct, is that July could be the period of time where we see that soft landing and getting very close to an adjustment. That being the case, if we see a reversal of downtrends from the Fed in July, that would be an absolute bombshell in a positive way to the crypto markets moving forward. So anyway, guys, we're going to do our live today with Greg Foss. He's a Bitcoiner. And I always love to get with Greg because he has some very pragmatic approaches. So make sure and tune into that. I think it's going to be at 1 o'clock. So we'll have that one for you. And of course, if you guys are not part of the Diamond Circle, get in now. It's really easy. It's inexpensive because it's free. And it's just an email that we circulate. We keep you up to date. Sometimes we'll drop in additional content there. We'll drop some CPI stuff, all that good stuff. You can do that. If you guys want to reach me, it is out there on Twitter, @Paul Barron.